So to solve these things, the table is very important. So let's start with number 24. What is the taxable income if the taxpayer is resident citizen? First, we want to read the question carefully. It says taxable income, not income tax. The difference is taxable income is how much income the total first before we tax it. Income tax is after we tax it. How much do we tax? So it's asking for taxable income. And to get that, we just have to see this first. So it says resident citizen, right? So we look at this row and we want to read it all. So the sources of income is within the Philippines, outside the Philippines, net income, and graduated tax rate. So first, within the Philippines and outside the Philippines. So all of this location is within, these are outside. And then, so we include all three rows. But it's asking for our net income. What net income is just gross income minus business expenses. Do we deduct non-business expenses? No, because non-business expenses or personal expenses are not deductible. They're not tax deductible. So we just ignore this completely. So we do this by adding all three, 8 million plus 4 million plus 10 million, which will give us 22. And then we minus 2 million minus 2.5 minus 5 million. We'll get 12.5 million. For 25, once again, it's asking for taxable income of a resident alien. So we want to see where is the row for resident alien. Yes, no, net income, graduated tax rate. So its taxable income is not including outside the Philippines. So we disregard these two rows because they're outside of the Philippines. And since it's asking for net income, it's just 8 million minus 2 million, which will give us 6 million. Next is the taxable income for a non-resident alien engaged in trade or business. Once again, we just have to consult the table. So we look for this row. Within the Philippines, yes. Not no, outside the Philippines, no. Net income, 0 to 35%. So we just have to find the net income of within the Philippines. So 8 million minus 2 million is 6 million. Next, determine the tax income if the taxpayer is a resident foreign corporation. So we just have to find where that is. So it says here, foreign corporations, resident engaged in business, non-resident not engaged in business. We're looking for resident, so we choose this row. Within the Philippines, yes. Outside the Philippines, no. Net income, 25%. So we just have to find the net income for net income of within the Philippines. So 8 million minus 2 million is 6 million, which will give us, 6 million. Next question. Determine if the taxable income is a domestic business partnership. So once again, it's asking for taxable income for our domestic business partnership. And I think for this, a domestic business partnership, after doing research, this tax classification is the same as a domestic corporation. Now, do note for the quiz, if it says general business partnership, it's different. General partnership is like a law firm or an accounting firm. These aren't subject to corporate income tax. But since it doesn't say general, we assume that it is classified as domestic corporation. So what does it say in the row? Always check the row first. Don't rush to answer the question because you might miss out on key elements. Yes, within the Philippines. Yes, outside the Philippines. Net income, 20 to 25%. Sorry, 20 or 25%. So since we look for within the Philippines and outside the Philippines, we add all of these and we minus all of these. Since it's asking for net income as well, we just minus, and we get a 12.5 million. Number 29, determine the personal income tax of a non-resident citizen. So if you read carefully, it's not asking for taxable income. It's not asking for the total. It's not asking for whether how much will be taxed. It's asking how much is the tax. That's the difference. So if it's asking for the tax, we have to get the taxable income. Then we use the steps to obtain how much the tax is. So the first step is always to find the taxable income. So as always, check what it's asking for. It's asking for a non-resident citizen, a Filipino who doesn't live in the Philippines. If you look at the table, the non-resident citizen, source of income within the Philippines, yes. Outside the Philippines, no. Net income, graduated rate. So first, let's find the taxable income. The taxable income is net income. So we want to find the net income that is only within the Philippines. We do that by getting 8 million, 8 million minus 2 million, which will give us 6 million in taxable income. But that's not all. We have to find the income tax. And how we do it is through another table. But first, we want to check first. How do we get the tax? Because it's different for every time. And it says it's 0% to 35%. This means it's the graduated tax rate. It's the progressive system. So if we see here, where is it? Here. So how does this work? First, we want to see how much our taxable income is and which row it is part of. 6 million is a part of this row right here, over 2 million, but not over 8 million. So we must look to the right here and see how to do it. If we see here, it says 402,500 pesos plus 30% of the excess over 2 million. The important thing here is excess. We don't 30% 6 million. We 30% the excess of 6 million over 2 million. So first we have 402,500. Self-explanatory, we just have to write that there, no need to worry. Then we get 30% of the excess, which is 6 million minus 2 million. 6 million minus 2 million, which is 4 million. 4 million times 30%. Then we add 402,500, which will give us this answer. Next question. Determine the income tax, not the taxable income. The income tax if the taxpayer is a non-resident alien not engaged in trade or business. So let's always go back to the table. Non-resident alien. Sorry, here. Yeah, this one. Non-resident alien not engaged in trade or business. Yes, no, gross income, 25% final tax. This is why it's important to read the table before solving, because it can be easy to solve it and then check, oh wait, it's gross income pala, it's not income, not net income. So I know because I made this mistake in the practice quiz, so I'm just sharing it with you. So it says gross income, right? What is gross income? It's already here. This is the gross income. We don't have to deduct anything. So within the Philippines, outside the Philippines, no. 8 million is the taxable income. We don't have to deduct anything. Now, how do we get the tax? Is it a graduated rate? No, it is 25% final tax. So to get that, we just get taxable income, 8 million, our gross income, times 25%, which is 2 million. Next, determine the income tax if the taxpayer is a domestic corporation. So within the Philippines, yes. Outside the Philippines, yes. Net income, 20/25%. So first, get the net income, the taxable income, which is net income. So add these minus total of these, which will give you 12.5 million. Now, it says here 20/25%. Now, what could that mean? So if we scroll here, it says here that domestic corporations have a different rate, different percentage rate, depending on certain situations. So in general, by default, it's 25%. But if the net taxable income does not exceed 5 million and total assets don't exceed 100 million, we can do 20%. So let's check. How much is the taxable income? 12.5 million. Is it more or less than 5 million? It's more than 5 million. So it requires us to not exceed 5 million, which means that we fail this prerequisite, which means that we have to default to this one. If let's say the taxable income was 3 million or 4 million, We might be able to use this 20% tax rate, but since it's not, we have to go with this one. So 12.5 million times 25% final tax equal to this amount. The income tax if the taxpayer is a non-resident foreign corporation. So foreign corporation, non-resident. So we go with this one. Yes, no, gross income 25%. So gross income, right? So what's the gross income? 8 million. Do we get income from outside the Philippines? No. So only 8 million. 8 million times how much? 25%, which will give us 2 million. And lastly, find the income tax if a taxpayer is a domestic trust. So what a domestic trust is, there is a grantor. So there's someone who wants to give money or property to someone else, but they give it to a third party who is called the truster or the trustee. I'm not sure, but basically he lends it to this person, who will then give it to the other person. So how do we classify if you are the domestic trust, how much tax you pay? Because when you get money from person A, that's income, so you have to pay tax. How do you calculate it? First, you get the taxable income. But how do you get the taxable income? When you domestic trust is classified as a resident citizen. So get the rule for resident citizen is yes, yes, net income graduated rates. So you get the net income like we've always done. So this plus minus this, which will give us 12.5 million. Now, it's graduated rates. So we go to this table. Now we see, where does 12.5 million go? It's here. It's over 8 million pesos. So to get the income tax, we just get 2,202,500 plus 35% of the excess over 8 million. So what is the excess over 8 million? It's 8 million. It's 12.5 million minus 8 million, which is, you do the math. Then you times 35%, then you plus 2,202,500. And just quick reminder to always do the brackets first. So get the deducted first, then you multiply next, then you add. You don't want to add this to 35%, then yeah, you want to make sure you do it in the right order of operations, which will leave you with 3,707,500. So yeah, that's the practice quiz. I hope this helped you, and yeah.